Hello everyone, Larry Lavrentich for Ichimoku.co with a daily analysis for the SP 500 for the trading day ending Thursday, December 12th, 2013. Well, a continuation of the trend to the downside today. Candle that's made a lower high and a lower low following the very large range candle from the previous day and the very large black body candle. We have had a much smaller body to this candle today, suggesting that the sellers don't have the same momentum that they had for the previous day's trading, but they still have maintained control and they still have made negative momentum. The problem here for the sellers is that amount of momentum that they saw established for the previous day's trading has really reduced quite dramatically, and little wonder when the market has interacted with the 1775 level of previous resistance and then support, and now the market has tested down below that level but failed to close down below there. So quite an important moment coming up in the market for the next day's trading. If we do have a bearish close down below 1775, it may suggest quite a change in sentiment in this market. We could see the market initially testing down to around the 1760 level, then down to a minor support level around 1753, and then to a more major one down around 1746. But really a lot hinges on how the market behaves around this area, and indications are that we could see the buyers come back into this market, but we won't preempt the market. In terms of the Fibonacci extension, we're examining the relationship of this current first time frame downtrend that the market's into the previous time the market's trending down. And here we've seen the market interacting with the 100% level, an important level. We have closed just below there in a moderately or fairly bearish manner. It does suggest a possibility of the market testing down to the 161.8% level at 1755, coinciding with this potential minor zone of support. In terms of the Fibonacci retracement here, we've seen the market trading through the 100% level again, and in a more substantial way than the other Ichimoku technique, suggesting a possibility of a test to this 161.8% level, which is roughly around that zone of the previous technique, around 1759. So that is an important level to watch if the trend does continue to the downside. Now, importantly, we have had completion of that head and shoulders pattern that I mentioned earlier this week, and as with all patterns, we require a previous trend, and here we have a very strong uptrend in the first and second time frame. Here we have the left shoulder, the head, and the right shoulder, where the peak almost made it to that to the top of the head but didn't quite, establishing the left shoulder, the breakout, and the close below the neckline. Important that we have the close below the neckline. The close below the neckline is what completes this pattern, and then we can project the depth of the head to the neckline down from the area of the breakout, giving us a target down around 1745, coinciding with the potentially fairly strong support down around this swing low. In terms of Ichimoku, still a bullish market in the long-term time frame with the market trading above the cloud, but we have had a significant event here in terms of the Kijun-sen. A close down below the Kijun-sen denotes a bearish market in the medium-term time frame, and it may be suggesting that we could see this market trading lower. So a possibility of this market trading down to around this swing low, around this 1746, 1745 level, if the market does trade down through this 1775 level. So what we're looking for here tomorrow is follow through, and that will confirm this signal that we've got with the Kijun-sen. And what we'd like to see to have confidence in this being a bearish signal, and by the way, with that signal occurring above the cloud, it is a weak signal, but to have more confidence in that, we'd like to see some bearish follow through, so the sellers taking control of this market again. So we are on the lookout for that. In the short-term time frame, the market is trading below the Tenkan-sen, and if you recall, we were looking for this second close down below the Tenkan-sen. We had some price activity of 2 consecutive trading days down below there, and it has been some time since we've seen that type of price activity, and that confirmed the negativity and the change in sentiment that we saw in this market. But really, moving forward, everything here for this market for tomorrow hinges on how the market reacts to the 1775 level. If we have a bearish close down below there, we could see the market trading lower. If the buyers come in strongly, we could easily test up to the Tenkan-sen, which is trading at 1791. or back up to the round number resistance at 1800.